Three polls part one, the accumulation poll. This will be the first part of a multi-part series that I'm going to do on all of the different trend-based fib extensions that I use, which are more commonly referred to as three polls. We'll go through the charts here together with several different assets and different time frames, and I'll walk you through how it all works and what the guidelines are. So without further ado, let's get into it. So we'll start here on the 4-hour chart with ES1 back in June of 2022. I've mentioned before that larger traders and institutions can't just fill up an entire position off a perfect wick high or low like we can do. Say that the market has given a good retrace into a discount zone, and an institution or a larger trader has conviction for the markets to go higher. In this case, we have a nice scalp pull down to this momentum pivot, giving us targets between the -1 and the 706 right here. If they need to fill up, say, a multi-billion-dollar position or more, then they'll likely need to accumulate that position across some range over a period of time. If they try to fill up the position too fast, then they either won't get as good of an average entry, or they could inadvertently start forcing the next move of the market before their position is filled. For these types of traders, good moves take good time. But for us, once price breaks out of these accumulation ranges, then we can use a trend-based three pull to estimate the targets of that move, which is where we can look for the reversals to trade off of. To feel the most confident that an accumulation has occurred and that our fib pull will be accurate, we'd like to see a volume or time profile of that range have a relatively normal distribution like this, shaped like a bell curve with most of the volume and time spent in the middle. It doesn't have to be perfect, but it's important that it has the right general shape. Now let's look at NQM on the 5-minute from March 26th. Accumulation ranges typically occur after price has put in a swing high or swing low pivot in order to build up positions for continuation. To see if a range would be appropriate for this type of pull, use a fixed range profile and draw it across your range to see if it's giving you a nice bell curve shape. This will look like a capital letter D. If it looks good, then we can take our 3 points from the high to the low to around the 0.5 of the value area. Create a 0.5 fib template to make this faster. If the point of control is around the middle of the value area, you can just use the point of control. It's not that big of a deal. In this case, they're pretty similar and I've already pulled the 0.5, so we'll just leave it here at the 0.5. Now let's take a look at Shib on a 4-day chart. When deciding where our range starts and ends for the fixed volume profile, we rarely ever want to pick the swing high or low pivot. Assume that the savvy investor did not want to knife catch the bottom, but they waited for that reaction first, and then once they saw the buying interest create the pivot point, then and only then did they start investing into that accumulation. So when deciding where to start your range, look for the first place that price was supported after the swing high or low was put in, and then pull it through the range to the momentum pivot before it broke the range. Every range will be slightly different, so allow a little bit of flexibility with these guidelines. The concept of this pull is purely logical. There was an investment made during this accumulation, and the three pull gives us the 2-to-1 and 3-to-1 reward to risk zones where we could expect the traders who invested into that accumulation to be taking their profits. We will look for these take profit zones to be potential reversal areas to take our trades from. We'll use similar fibs as we do with the scalp pull, but we just add 1 to it. So we'll use the 1618 to the 2, and then the 2618 to the 2832. And then, of course, the 3236 as our final stop. Think of the 3236 as the level where it would be fiduciarily irresponsible not to take full profits from that accumulation. And if full profits are taken, then we could expect at least some type of retrace from that level in order to reaccumulate or a full reversal. Now let's take a look at the Bitcoin range from this time last year. With the scalp pull, we don't use extended targets that often, but with an accumulation pull like this, we more often expect price to try and get to its second set of targets, which we can justify logically because there was more time invested into that move, and the investors would more likely be seeking a larger reward for that investment. Let's go back in time now on Bitcoin and look back at this range from Q1 of 2022 on a 4-day chart. For the most consistent accuracy of the target fibs to give you reactions, don't overuse this pull. Save it for those specific ranges that give you that nice bell curve D-shaped profile. So if I pull a volume profile on this range here, we don't have the nicest looking profile here. There's an extreme end on the bottom without that much volume on it. If you have a good looking range and profile, but you have extreme ends with no volume on them, just don't include those parts on your pull. Instead of using a high or low, use the actual part of the profile where the volume began. In some ranges, this may have you just focus more on the smaller part of that range rather than the full range. In this case, if we just take it to the second high of that range, like we've talked about, this pull does a perfect job at eliminating that extreme end on the bottom. Once we re-pull the fibs to the actual volume here, we can see that this pull gave perfect accuracy for the first and the second major pivots that Bitcoin put in on the way down here. It even gave several backtests on the way up, as we see here. Now let's go forward in time on Bitcoin from a more recent range, this one from January of this year. We'll pull our profile starting from the point after the first swing low, where there was a retrace where bulls supported the initial move to keep price up here. And we'll pull it over to the momentum pivot before price broke out of the range. In this example, we have an extreme end on the top here that has virtually no volume on it. Now, ordinarily, when seeing a profile like this, I'm going to be leaving out this extreme end. So I might take it to a candle somewhere around here where the volume actually began on the top side here. And then I'll pull it down to around the 0.5 of the value area. In this case, the point of control is at the 0.5. So I'll pull it like that. But as price pushes through the 2 here, I may actually pull this up to the high, which is the greedier pull, just to see if it's getting respected more. And since we see perfect respect from the 2 here, because respect is king, I'm actually going to keep this pull on for my bias to look for the second set of targets right here, rather than the original pull. Now you can see both ultimately did get respected, but I would prefer the pull that showed more respect from the get-go. So if we made that switch like I did here, noticing that this was a pull that got respected better from the beginning, it gave us the second set of targets here to look for a short opportunity, and also gave a perfect backtest on the first set of targets. Going back to Bitcoin from the summer of last year, some accumulations, and more so with reaccumulations, there can be new highs or lows put in along the range that take the original swing high or low of the range. This is perfectly fine. So if you have a range that gives an overall nice looking profile, don't worry so much about the perfect start or ending places of that profile. Just think to yourself, where would be the most logical place for accumulation to have started? And that's probably around the first or second retrace of that range. And also just focus on what's giving the nicest looking profile. Now I can use this same range to go over another topic, which I briefly mentioned earlier. If any of the sets of targets are disrespected, like the first set of targets here as we went up, that area can actually be looked at for a backtest for continuation of the higher time frame move. Let's look at a few more examples. Another one here on Bitcoin on the daily chart from May of 2022. So this is a nice little reaccumulation here. And like always, I'm pulling it to the first retrace after the initial swing pivot was put in. and I'm pulling it just over to the momentum pivot before we came down. Now, you see on the volume profile here, even though there's a wick down here and a wick up here, there's actually no volume up there that you can see. So I'm going to pull it down to the next candle over here where the volume actually starts, and I'll pull this over to the next candle over where the volume actually starts down here. So price comes down, gets to the first set of targets, small reaction there, but nothing major. So of course we just look for the second set of targets, and we can see really nice reaction here, and then a fib backtest on the first retrace, which is where we would look for a more confirmed and optimal entry. Then we come back down and the zone continues to hold for a little bit longer before eventually coming to the 3236. If price were to push past the 3236, all that means is that there's a higher time frame move in play. So switch to a higher time frame and see what else might be going on. Price pushing past the 3236 doesn't always mean that it's not respecting it. Sometimes it will push past it momentarily, like you see here, but then eventually it'll climb back above over it, and then it can give you a really nice opportunity for a backtest before the major move actually starts. Let's look at a couple more examples on ES1. So now we're in a 4-hour chart back in December of 2022. So we put in a swing low and we pull our fixed range from the first retrace after that low was put in, and then pull it over to the momentum pivot before the range break. The volume profile here looks perfect, so I'm just going to pull it from the low to the high here, and then to the EQ of the value area. We can see really nice respect from the first set of targets. There was a retrace, and then perfect respect on the 2, another retrace. Eventually, it goes through the second set of targets here, momentarily rises above the 3236, but then it aggressively breaks down from it and then gives 2 perfect backtests of that 3236 before ultimately making its way all the way back down. One more example on ES1 here, and we are in April and May of 2023. We're on a daily chart and we have some sort of reaccumulation here. So just like always, we have the first low that was put in, and then I'm just going to start the profile at the first retrace after that and pull it over to the momentum pivot before the range break. The volume is relatively equal here, so I'm going to pull it from the low to the high and then down around the point of control or the 0.5 of the value area. We have a really nice reaction here on the first set of fibs, and then a great reaction from the 2706 right here. Ultimately, even though these lows were taken, we did come up and again gave a reaction from the same pull on the 3236 of that pull. It does end up climbing over the top of it, but then it loses it again and it breaks local market structure. This gave a heads up for a really nice short opportunity on the next backtest of that 3236 right here. Now this leads me to another important topic. So let's look at this range on Bitcoin from August till October of last year. If we just pull from the low to the high to the EQ of the value area, we can see this pull did not respect the first set of targets at all, and then it didn't even really respect the second set of targets either. It gave a bit of volatility where some profit taking was probably happening, but it never really broke the market structure or the momentum of the move up. After a couple small reactions from the 3236, it actually blew straight through the 3236 like nothing. This just means that this smaller accumulation here was part of a much larger, higher time frame move up. So we push past it like nothing. What do we do on the first retrace? We actually tap it as a backtest perfectly before continuation of that higher time frame move. Like I said before, if price pushes past a set of targets like nothing, then if you get a retrace into that set of targets, you can look at those areas as SR flips for continuation of the higher time frame move. Another really important topic here is don't just limit yourself to standard ranges that you see with your own eyes. Look at time profiles. You can look at session, day, week, month, even quarterly profiles as well, which are going to be fixed to those specific time periods. Time can be even more important than volume when it comes to accumulation. Accum profiles from these fixed time periods can give you some of the best respect of our fib targets. Let's take a look at Bitcoin a little bit more locally. Now we're on a 30-minute chart, and I have the periodic volume profile open set to day. So every day it's going to give me a new volume profile. And as we're coming down here, we notice here on March 18th, it gave a really nice accumulation compared to any of the other volume profiles coming down. So we can use our 3-pull from that accumulation and get our 0.5, pull that third up to the 0.5. Now we can hide the volume profiles. And we can see here, it gave perfect respect from the 2, perfect respect from the 2706, and then it even came and gave us some really nice backtests on that 2 right after breaking that local market structure. It even backtested it a second time afterwards before a bigger leg up. Adding to this thought, let's look at NQ1 on the daily chart, and we're going to set our periodic volume profile to monthly. If part of a fixed time profile looks like a cum, but the other part doesn't, then you can just pull the fibs from the volume node that looks like the accumulation and ignore the rest, just like you would ignore the extreme ends on a wick. Let's look at this month right here, which is August of 2022. This part of the profile definitely looks like it could be an accumulation, but then you have this extreme end here, which doesn't make much sense, so we can just ignore that part. And we'll do a 3-pull based just on this volume node up here. We'll take our trend-based fib pull from the high to where the volume starts, I'd say right around here, and then we'll do a 0.5 fib, pull it just like that, and we'll hide the periodic volume profile. Price pushes past the first set of targets, so all we do is just look for the second set of targets. We get a strong reaction here with a giant wick from the second set of targets. We start to break local market structure, and then it even gave us a couple backtests here. Then it comes up again, starts to break even more market structure, and it backtests it a second time, which it continues to hold. As price continues to reverse this momentum move down, it even gives you a really nice backtest of the first set of targets, which at first did not give the reaction. And then, well, a giant move up came from it. Let's talk about a few more common situations, and we're on the 5-minute chart here on NQM, and we're looking at the 25th of March. So we put in a really nice volume profile on this mini range here, which gave a absolutely picture perfect reaction from the 2. Strong reaction with a buying wick and then a nice backtest right before an aggressive V-shaped reversal. So in this situation, you can actually just take that same fib pull and click the reverse button. Then you can look at the same exact targets from this reversed pull to give you your short opportunities, and even a couple nice backtests before another 2 legs up. On a similar note, you can get an accum before a PO3 type setup, even though the lows or highs were taken again. Just like on the NQ example, you can still use that accum for targets, just ignoring the manipulation aspect of it. We have our accum here from the low to the high to the EQ of the value area, gave perfect respect of the 1832. Now, price pushed past the 2, pushed past the 2618 and 2832 like nothing, and now is actually above the 3236. Now, I have no idea what's going to happen with gold. This part can't be hindsight because it hasn't happened yet, but we do have a respected accumulation pull because of the reaction from the 1832. And now that we've pushed past up through the 3236, if we've learned anything from the past examples that I've shared so far, we can expect a few different things. The first thing we might expect is perhaps just a momentary disrespect of this 3236 before we come down and actually backtest the 3236 as resistance later before another leg down. If we see something like this, we can get a short entry right on that 3236 on the backtest. And of course, because we pushed through the 2618 to 2832 zone like nothing, that could also be an area that could hold as support, either for that 3236 backtest or for another larger move up. If price did manage to come all the way back down here to the 1618 to 2 area, we could also look at that area to be held as support for another leg up. Lastly, If gold decides to be extremely bullish, then we could also see a situation where we come way above the 3236 and then eventually come back down and backtest it as support before yet another larger move up. If we were to come back underneath the 3236, hold this second set of targets as support, backtest it, maybe a couple different times, then I would not expect this zone to act as support a second or third time. I would probably expect us to break down to see if this first set of targets could act as support. If we get another retrace and come down again, then again, I probably would not expect this first set of targets to hold as support a second time. And we could probably look to get a decent retrace of most, if not this entire move up. We can't ever predict what will happen, but we can know how to react based on the interactions of these fib levels. So there's just a couple final points to make before we can wrap this up. Let's look at Bitcoin again on the daily chart, and we'll look at the summer of 2021 range. We'll take our profile from the first retrace after the major swing low was put in, so right here, and we'll pull it to the momentum pivot before price broke out of the range. Now I'm going to ignore the extreme lows here that don't have any volume, and I'm actually going to start the pull at this momentum pivot, which is right about where the real volume started. And then I'll do the same thing, pull it up to the high where volume started right about here. We'll pull our 0.5 fib, and you can see from this range, the first set of targets offered a little bit of resistance, but we didn't have any weakness or market structure breaks. Price continued to grind through them. Then we started to see reaction from the second set of targets, came and back tested the two to come up and actually perfectly tap that 2832 up there before coming down, giving another back test of that 2618, coming back to the first set of targets, and ultimately holding that 2 that was neglected the first time around to actually be the resistance to force the larger move down later. If we throw these fibs in log, then we can see equal respect from the 1832 to the 2 zone. What we would have done in this case is used both of these fibs. So we would have marked a box between the 706 and the 2, put that back in linear, and then notice that there was nice confluence in that zone between the 2706 and the 2832, and that's of the linear pull. Now we're going to focus more so on the zone that is the brightest shade of red. But of course, we're going to mark out this zone as well between the 1706 and the 2. Now, oftentimes you'll have a smaller accum within the larger accum. In this situation, see if the second tier targets for the smaller one match up with the first set of targets for the larger one. We can get rid of those fibs and we'll see if there's a smaller accumulation within this larger accumulation. We can first look at the area right after the actual swing low was put in. So we'll pull that range up to the first retrace after that swing low was put in. We'll adjust the 0.5. Now, this is not the prettiest looking accumulation. It is long and uneven throughout. However, because the larger accumulation looked so nice already, we can still use this smaller accumulation for confluence. Let's take our pull from where the volume starts at the bottom here to where the volume stops up here, and then to the 0.5 of the value area. Now we can notice here that there's small little areas at the top and at the bottom of this volume profile that have next to no volume on them. They're subtle, but they are there. But say we don't notice that for now, and we're just watching price to see how it reacts with our fib levels up here. As we notice something like this, where the reaction here came on just the smallest front run of the 618, and then here, just the smallest front run of that 1832. We could just pull it down a little bit to see that they're getting respected, which also makes sense for ignoring part of this area that it doesn't have any volume attached to it. Now we have a little bit better respect both from the 618 and the 832 there, and we can use this pull as confluence with our higher time frame pull. So just like last time, we'll mark out our target zones It would have been too late for this part because we needed to use this in order to see what was getting respect. But we would have marked out here the 2706 to 2832, and then also here the 3236 at the top. So let's just get rid of both of these boxes here that don't have any confluence with them. We want to focus just on the two zones that are the bright shades of red, that have the most confluence between both of our pulls on log and on linear. And again, we did adjust it a little bit to make sure that it was getting respect on the first set of targets here. And that's what ultimately led to the perfect respect from the 3236 right here at the top. Now, we didn't actually see it happen in this specific example, but if you use this same theory and find some of these examples for yourself on any different asset, on any different time frame, a lot of times when you have a lower and a high confluence area to look for this short opportunity, what you'd see is a breakdown underneath that lower level of confluence, just like you saw here, and then you'd come and backtest that one as well before finally making that larger move down. So there's one last situation that I want to make sure to drive home, and we're still on Bitcoin here on the daily chart. Let's go back to this accumulation range that we already talked about from March and April of 2022. So just like the previous example where you have a smaller accum within a larger accum and you can use those targets together for confluence, a similar situation is when you have a larger accum that has its targets, but then along the way you put in a smaller reaccum, which gives you confluence for the same targets from your larger one. Let's look at a couple of these smaller reaccum ranges and we'll see what happens. I'm just going to focus on where there's volume, so I'm not going to count any of this wick here. So we can see on this very small reaccum right here, price did push through that 3236 in order to get to the targets of the larger accum, but then it ultimately wicked right up above it again, and then it held that 2832-2706 area as support for a small corrective move up. If we throw this on linear, it actually gave absolute perfect respect of that 3236. Now let's take a look at this other reaccum right here. Now I really don't like this big gap in the middle when I'm looking for accumulations. However, we have to keep in mind that if we're trying to find confluence for these larger accum targets down here, then we need a pull that actually helps us get there. If we just do a pull on only this high volume node right here, a lot of times that would be perfectly valid. But in this case, as you notice right here, that 3236 of that pull, it doesn't even get to the second set of targets of the larger pull. So it doesn't actually help us in this situation to do it like that. So this is a situation where you're not necessarily bending the rules, but if prices push past the first set of targets from the larger accum, then you are going to expect the second set of targets or the 3236 to be hit. We don't care about anything in the middle here. The larger accum pull here is the priority. So if we're trying to find confluence to help us get to those targets from this larger accum that does take priority, then we'll have to think about this range a little bit differently just so that we can actually get our confluence. So I'll pull it left a little bit to the first initial retrace just to get a little more volume information. I'll repull the 0.5, and in this case, I'll actually just use the high and the low of this entire mini range. So as you can see here, the first set of targets did not really have confluence with the second set of targets from the larger pull, so it didn't really necessarily help us that much. But what was really nice here was that the 2832 and the 2706 of that reaccumulation range pull was perfectly dead on with the 3236 of the higher time frame pull. In that case, it gave us the perfect confluence zone in order to take a trade off of. So you'd probably be waiting for a reaction first and not knife catch, but once you started seeing some breaks of the internal market structure and then getting a retrace, backtesting that 2832 two separate times, that's when you can start getting involved right there. If you take that higher time frame pull off and focus just on that reaccumulation, you could also see that ultimately that 15K low of Bitcoin was just the 3236 of that reaccumulation range, dead on perfectly. So that wraps it up for the Accum pool. I hope you guys learned something, and until next time, keep making money, and I'll see you in the next one.